A very good evening to all the participants, to all Ventura Suceder clients. I welcome everyone and thank you all for joining us in today's webinar, International Investing. I value your time and I am grateful that you are taking time out to attend this session. So it's my duty to make your time absolutely worth it. Sunday, evening time, family time. And I'm surely going to do it. You can count on me. And I request you don't miss out on this session as a lot of valuable insights and strategies are coming your way. Friends, can you please type your location in the chat box from where you are attending this webinar? Please type your location, area. Is it from Hyderabad or outside Hyderabad or outside India? Please type your location in the chat box. If you want to make a change in the diversification of your portfolio, then this webinar is for you, friends. We have something special for you. I'll just read out. Let me see from which places the present participants are there. Mr. Abhishek from Hyderabad, Suman, Hyderabad, Dr. Satyaprasad, Hyderabad, Bharat Kumar, Anantapur, Pavan Kandadada, Hyderabad, Suman, Hyderabad, Kakinada, Prasanna Chandralekha, Kakinada, Bhimvaram, Venkat Rajshekar. Okay, Hyderabad. Most of the people are from Hyderabad. Nikhil Trivedi from Divas and Kerala. Dr. Venkat Prasad from Kerala. Bhanu, Kakinada. Okay, friends. Thank you. Thank you for your wonderful participation. Happy to see all the Ventura Suceder clients from different places. So why are we here today, friends? Why international investing? We all are investing in mutual funds, Indian mutual funds. Now, why the topic international investing? Because over the last 10 years, if you see, the US markets have consistently outperformed the markets in India. Companies like Google, Amazon, Facebook, and Netflix are growing at a tremendous pace, driven by a global footprint and mass adoption. If you observe, friends, the clothes we wear, the sports shoe we wear, the laptops we use, Zoom for meetings. Today we are using Webinar Jam for this meeting. We use Amazon, we use Google, we use Facebook, Microsoft. We are all waiting for Tesla. And we look at Netflix. We look at Amazon Prime. We use Spotify. So all these companies, friends, the point is that we are huge consumers of these international companies. And these companies are growing because as it's not growing because the US is growing at 1%, but India is growing at 8%. So naturally, all these companies are also growing and also growing because of the emerging economies like China. So therefore, global growth also powers the valuation of these companies, friends. These are the global companies. All over the world, people are using these companies. Looking at these components, investing in the overseas market makes a lot of sense, friends, lot of sense. We use these companies every day, but are missing out on investing in them and benefiting from their stock performance. So to bridge that gap, friends, we are bringing the Globalize platform to you. Globalize, it's the India's first global investment platform. Globalize will enable you to invest in international markets. No minimum account balance, no minimum trading fees. The platform is designed and built exclusively for customers in India. So friends, I welcome you all. We are happy to host the webinar for all of you. Kindly note that all the participants are in a listen-only mode. If you have any questions, please share them with us through the chat box on the right-hand side of your screen. And we will address your queries at the end of the webinar. And by the end of the webinar, we also have a special guest, the chairman and founder of Globalize. The last 15 minutes, he would be coming here and answering our doubts. The session would be interesting with live polls on your screen also, friends. And in between, if you see any interruption of audio or video during the webinar, some people might be attending the webinar for the first time in Ventura Suceder. So just click that reconnect button at the top, friends, if there is any disturbance in audio and video. Now, let me share my presentation. Let's start our journey of international investing. Is my presentation visible to you, friends? Please type PPT in the chat box if you can see the presentation. Please type PPT in the chat box. Let's start the journey of international investing. Please type PPT in the chat box. PPT. So that I can continue further if you can see the presentation. Okay. Thank you, friends. Thank you. So let's start the presentation with a famous quote by Paul Samuelson. What is this, friends? Investing should be more like watching paint dry or watching grass grow. If you want excitement, take $800 and go to Las Vegas. So this is a famous quote. If you think investing is gambling, you are doing it wrong. The work involved requires planning and patience. However, the gains you see over time from equities are indeed great. So coming to equities, friends, why equities? What is the advantage? So equity is one of the few asset classes that offers you a great opportunity to maximize returns, provided you are ready to take the required amount of risk. So there are two types of returns you get from investing in equities. One is capital appreciation, and the other one is dividend income, which I have shown you in the slide. Investing in shares with fundamentally strong financials can help you earn a regular dividend income. And equities also have a high return generating potential to give you a high capital appreciation in the long term. Friends, over the last 20 years, Indian equities have generated a 13% compounded return, measured by the returns on the Nifty 50 total return index. So when we are discussing about equities, so equities have such power, then why foreign equities? So coming to this, let me run a poll. I'll just launch a poll here, friends. What is the percentage of global stocks? Please answer this poll. What is the percentage of global stocks of total AUM of Indian mutual funds? Let me make it clear, friends. I'm asking you, say X amount of, say X lakh crores is the total Indian mutual fund industry. Then what is the percentage of global stocks in that X? Because we are all investing in Indian mutual funds. What is the percentage of global stocks in that X of X total AUM of mutual funds? I'll wait for a few more seconds because still the answers are coming. Options are here: less than 5%, 5% to 10%, 10% to 15%, and more than 15%. Friends, each and every poll designed in today's webinar, it has some important analysis which we need to know. We have 4 polls in this webinar. All the 4 have important analysis to be made by us today. So let me wait for some more time and close the poll. You can also see the result of the poll. I'll show you the result of the poll also. Still the answers are coming. So that's the reason I'm giving some more time. Okay, let me end the poll and show you the result. So I think you can see the result, friends. Less than 5%, 43% of this today's participant says global stocks has less than 5% in total AUM of Indian mutual funds. Whereas 5 to 10%, 27% of this group says 5 to 10%. 10 to 15%, 13% of this group says, and more than 15%, 16% of the group says. So here, most of the people, like the except that less than 5, all the other group of people, that is 56% of this group had said a wrong answer, because the answer is it is 4.4% of the total AUM of Indian mutual funds. So that is the reason we are here today. It's high time that the average Indian investor included global stocks in this portfolio. So let me continue. People are there from Dubai also, Vijayanagaram. Okay, thank you. Thank you for your attendance. Now, hope you have understood why we are today with this particular topic, foreign equities. This is the reason, friends. This is the reason for this webinar, and this is the reason for Ventura Suceder getting into international investing. So the bullish trend in Indian equities has made our portfolios look good. If you see past 6 months, our portfolios are very bright, looking good. At the same time, many investors are feeling worried by the sky high valuations and rising inflation, which could lead to tightening of liquidity. So one way to mitigate this looming risk is by diversifying our portfolio with global exposure. So Indians have progressively increased their usage of global products and services, which I told you in the beginning of the webinar, in the past few decades, widening their choices and deriving better value for money. So, however, this inclination has not spread to investments. We are the consumers, but not the investors. So, global stocks account for nearly 4.4% of the total AUM of Indian mutual funds. So, it's high time that the average Indian investor should have global stocks in his portfolio. So, for many investors, buying foreign stocks allows them to diversify by spreading their risk, in addition to giving them exposure to the growth of other economies. Because we are investing into a growth of all economies apart from India also. Many financial advisors consider foreign stocks a healthy addition to an investment portfolio. They recommend a 5% to 10% allocation for conservative investors. So out of your X portfolio, you can assign at least 5% to 10% to this global portfolio and up to 25% for aggressive investors. Okay, friends, so what's in it for you by attending this session? You will find a wonderful global investment platform from Ventura Suceder. You will know how to globalize your wealth. You will know how to buy international stocks and funds. You will know how to diversify your portfolio, and you will know how to build a corpus in US dollars. And what more, friends, you will have the advantage of fractional investing, which we are going to discuss today. Overall, you will be able to manage your global cash and investments in one secure place. So this webinar is for your benefit, and I need a lot of attention from you, friends. So those of you who have joined just now, a very warm welcome again. We just started a brief about the process, what we are going to learn. So before proceeding further, let me make an announcement. As promised, we will provide the international brokerage account opening link, which is waived for a limited, the joining fees is waived for a limited period of time. We will be providing that link. With that link, you can open international brokerage account. It's an easy process. I'll show you the process also in the webinar, and also earn $10 on signing up and completing your KYC. After opening an account with that link and confirming your KYC, which is a simple two-step process, $10 will be added into your account, and from there onwards, you can start investing, adding your money from your bank account. So friends, as you are prepared to listen to me for the next 1 hour in this webinar, is it okay if I tell something about myself in the next 2 minutes? Please type yes in the chat box. Please type yes in the chat box if it is okay that I'll tell you something about myself, because some people here are attending for the first time. Ventura Suceder clients, few clients who have added in this couple of months, they are attending for the first time. So thank you, friends. Thank you. I am Rajeshwar Reddy with an overall experience of, I'll reset the poll. Can you see the, okay. I have an experience of 25 years in marketing and advisory. I'm a QPFP, qualified personal finance professional, having exposure to pharma and financial sectors. I worked in ICICI, Reliance, and Bajaj Allianz. Quit my job as state head for Reliance Capital Services in 2009 and started financial advisory firm with one of my friend Chari, who is another presenter in this webinar. In these 11 years, we met around 3,000 people personally, and now providing financial services for more than 850 families, managing AUM of 100 crores. Friends, Ventura Suceder is now a 100 crore AUM company with 1.3 crore SIP book size. So all the investors of Ventura Suceder, all the contribution of their SIP book size every month is 1.3 crore. So we have insured more than 400 families for life and health, and the fact is that most of these families do not invest a single rupee without consulting us. So we are doing it professionally, but there is also some social responsibility involved. Our mission is to make 5,000 families financially free in the next 10 years. Hope this kind of digital meeting help us in reaching our goal of spreading financial freedom very fast. And thank you, friends. Thank you for your congratulations. It's all because of your trust in Ventura Suceder. Because few clients who are present in this webinar now, we are associated with more than 10 years, and 10 years is quite a big time, friends. So thank you very much. Thank you for your valuable support in making Ventura Suceder a 100 crore AUM company. Now, friends, I would like to invite Mr. Chari, Director of Ventura Suceder, who has an overall experience of 15 years in financial services. Chari, welcome to you, and please continue the webinar, Chari.
Thank you, sir. Thank you so much. Everyone, very good evening. If my voice is clear, please type yes in the chat box so that I'll continue the presentation. Thank you, everyone, for the congratulations and the support and the trust you kept on us. We'll continue the relation for the long years. Thank you, sir. Thank you, everyone. Okay, very good evening, everyone. Okay, I welcome you all. Thank you for joining this evening and appreciate your time. And let us give you some value addition for your time. Okay. Now, here is what one should keep in mind while investing in foreign securities. First one is foreign equities is no longer a fad. Okay, see the impact of Forex. And third one is focus only on top markets. Right, let's see them one by one, friends. Okay, first one is foreign equities is no longer a fad. Okay, till some time ago, a global equity exposure was considered a fad. That only deep-pocketed HNIs like high net worth individuals could indulge in. Okay, that's no longer true, friends. Right? Every investor should have some proportion of his stock portfolio in foreign equity. This investing logic is unbeatable, and the exchange rate provides an additional cushion. Okay, in the current scenario, where one cannot rule out the possibility of prolonged slowdown in the domestic market, it makes sense to hedge the portfolio by investing some portion in foreign markets that have strong growth prospects. Though in the short term, if you see in the short term, the returns of foreign markets are no different from those of domestic equities. There is substantial variance in the medium and long-term returns. Okay, investing in these markets could create real diversification. Okay, more importantly, cross-border investments are also a means to industry diversification, friends. Right? Increasingly, key industries are dominated by few countries. Okay, the stark example is the concentration of high-end IT companies in the US. Right? So, such as Apple company, Alphabet, and Microsoft, all these companies. The US companies have captured a large share of the value of the recent IT developments. When if you compare with countries like India, which are lower down in the IT value chain, okay, you can see the comparison chart between 3 years and 5 years, friends. Okay, so if you do not have exposure to US equities, your portfolio will not have adequate exposure to high-end IT sector. Okay, of course, incidentally, U.S. stocks can be bought in fractional units. So even if you don't have large sum to invest, we can start with fractions of the shares on the offer. That we will discuss in the next slides. Okay. Now, the second point is impact of Forex. Okay, foreign exposure is even more necessary for investors who anticipate for future expenses in foreign currency. Okay, the best example is sending your children for foreign universities, right? For such investors, the India-only portfolio represent an unhedged risk to a declining rupee. So the value of declining the rupee, right? In fact, in such cases, the diversification of the portfolio into dollar-denominated assets is simply an edge rather than an exposure. Right. So the foreign exchange impact on global investments cuts both ways. If the rupee strengthens against a currency, it will pair your returns. Right. While the dollar has declined marginally against the rupee in the past year, but the pound has risen 5%. However, the Forex movement will mostly work in favor of Indian investors in the long run, definitely. it will go, right? And the third point is focus only on top markets. Okay, when selecting a destination for your investment, focus on the top end of the market. Invest only in the countries with the most developed economies and the deepest markets. Okay, the US is the obvious first choice, friends. Okay, it is, you know, the by far the largest and deepest market. Okay, market regulation is solid and legal systems provide strong protection, you know, against all that malpractices and all, right? And if you see, its ecosystem supports innovation, which you know, it translates into more successful companies as well. And the USD remains the main global reserve currency, of course. And you know, when the liquidity cycle reverses, okay, whenever the liquidity cycle reverses, the impact on US is likely to be very less severe, right? So if you compare with other countries, like you know, the UK could be the next. It has many of the attributes of the US, like, you know, the regulation and the legal system and the innovation. But however, the impact of Brexit is still to fully unravel. That is the issue. And coming to the Germany and Japan could also be possible candidates, but avoid emerging markets. They could pose several additional risks. For example, in some cases like China, the quality of the information is poor and disclosure standards are questionable. That is a problem. And Chinese, you know, China is an extremely risky bet given the way Chinese government controls the economy and all, right? If you see, Russia are not true market economies, and government intervention can create unanticipated losses, right? Still others like Turkey have a weak balance of payment situations, and then currencies pose again unnecessary, unacceptable risks to the investors, right? So friends, now let me take a poll. How much exposure do you all have for US equities? So the poll in front of you, everyone please answer the poll. How much exposure do you have for US equities? Everyone please answer the poll.
Maybe some people might be already investing, so this question will be for them. But most of the people here, I think, they will be having less than 5% only. Yeah, I'm ending the poll because majorly it's a one-sided answer, because most of the Ventura Suceder clients are new to international investing. Probably people who are there in outside India, I think they have some exposure. So this question might be relating to them. Yeah, I'll end the poll and share the result. So can you see the result, chat? Yeah.
Yes.
So less than 5%, it's 90%.
90% of people having less than 5%. For many investors, buying foreign stocks allows them to diversify, you know, by spreading out their risk. In addition to give them exposure to the growth of other economies, many financial advisors like us consider foreign stocks a healthy addition to an investment portfolio. So we recommend a 5% to 10% allocation for conservative investors, and up to 25%. Some people, some financial advisors will recommend up to 25% also for aggressive investors. Right now, international investing. Okay, the options of international investing. Okay, investors can access foreign stocks via ADRs and GDR. Okay, so ADR is American Depository Receipts. The stocks of most non-US companies that trade in the US markets are traded as American Depository Receipts, ADRs. Okay, so global depository receipts, direct investing, mutual funds, ETFs, and MNCs. So these are the options investing in the options to invest in foreign markets, right? Buying foreign stocks allows investors to diversify their portfolio risk, in addition to giving them exposure to the growth of other economies, right? Now, why invest? We should invest in US market. Why? What is the reason why we are specifically targeting the US market? Okay, so let's explore why investing in the US market can prove to be good idea. First one is portfolio diversification. This is very important point. I'll clearly prove with numbers. And wealth creation, build a corpus in USD. Why we should build the corpus in USD? And strict governance. So these are the four main components what we as an advisor we have seen this. Okay, let's deep dive into these four options one by one. Okay, portfolio diversification. Portfolio diversification is the most obvious yet the most crucial benefit of global investing. A diversified portfolio acts as a source of stability during market volatility. This is very, very important. Okay, when you spread out your investment across geographies, there is a low correlation between them. Okay, this means that the volatility in one market is likely to, not to affect your other assets. Okay, many of the US listed companies have global revenues. Over 40% of the revenues of the S&P 500 companies, over 40% of the revenues of S&P 500 companies comes from outside the US.
Important point, friends. Very important point.
Right. By investing in the US itself, you can build a global diversified portfolio. Right. So, optimize risk return across developed and other emerging economies. India, friends, India is less than 3% of global market cap. So, you insulate from Indian concentration risk and adverse country-specific shocks. So hedge against rupees depreciation, right? So this is the reason portfolio diversification, especially in the US markets, is very, very important. Now, wealth creation. Global investing enables you to access investment opportunities that are not present domestically. And developed markets like the US are home to some of the world's largest tech companies. Right, so we are using all these companies, and at the end of meeting we clearly show you what are the things we have used all the tech companies from US to conducting this particular meeting. Right, so something you cannot access by investing in India. You may even choose a theme or a combination of multiple sectors. For example, you can prefer the US market for technology, and European market for engineering, and Australia for commodities. Like this, you can choose your theme. Okay, if you are interested in healthcare or pharmaceuticals, there are several options in the US market and European markets. Okay, participate in the growth of global companies such as Amazon, Google, Netflix. These companies having the access of innovative things, artificial AI, artificial intelligence, and biotech and clean energy. So gain from exposure to developed and other emerging markets. Right, now, the third point is build a corpus in USD. Very important point. Okay, there are roughly about 100,000 students from India. 100,000 students from India who go to overseas every year. Every year for education in US, Canada, in UK, in Australia. Roughly, 4 years course of this education can cost around $250,000. It's, of course, it's depending upon the country. So save for foreign expenses, including education, medical, and travel. Accumulate a corpus to deploy for even the people who want to invest in, the people who are there in real estate and other alternate investments. So save and grow the portfolio in USD for USD expenses. So the people who want to do the USD expenses, so save and grow the portfolio in USD for USD expenses. Right. Investing overseas exposes you to currency appreciation. Of course, sometimes appreciation, depreciation, both will happen. For example, the USD has been appreciating on average between 3 to 5% versus the INR over the last few years. That we are clearly seeing. In the long run, it's very, very huge differences there. And emerging market currencies depreciate over the long term. And interest rates in domestic savings accounts are at low, around 3 to 4% on an average. By investing globally, portfolios generally have the dual benefit of better markets and appreciating currencies, both the ways. Right. Now, the fourth point is strict governance. Strict governance. Shareholders are given a top priority in the US. For the shareholders, the US government will give a very top priority. Clients' accounts are protected by the SIPC, Securities Investor Protection Corporation, SIPC. Up to $5,000 they have to deposit. And another significant benefit of global investing is the protection of investments against fraud and liquidations. Okay, and developed market companies generally have strong regulations that ensure sound corporate governance. Right? It's severe. It will give us severe penalties for market abuse. Right? So this protect retail investors from potential scams and insider trading losses also sometimes. Right? So they protect. The protection is very, very strict. Now, friends, let me ask you another poll here. Okay, we'll run another poll here. What is the percentage of US equity markets of total world equity market value? This is very, very important question.
Because we are discussing so much on US markets. Let's see what's the percentage of US markets of the total world market.
This is the reason why we are targeting the US markets, why we are discussing more on the US markets, because we have to know out of 100 what is the share of US entire equity market in the world equity market value.
Answers are still coming, Chad.
Yeah.
And in earlier slide, a small correction, friends. SIPC is $500,000. $500,000. And now let me, okay, I'll, still answers are coming. Still answers. Okay, I will share the poll. And poll. So you can see the poll result, 25 to 50% says 44% of the audience, and 50 to 75 says 39% of the audience. So the answer is around 55.9, friends, 55.9.
55.9%. This is as of January 21, friends. 55.9% throughout the global market is not a joke. It's very huge. Very means very huge. Right? So this is the reason we are. Okay. Now, how much can I invest in the US market? Okay. Let's explore this. The LRS is the very important thing we need to know. So liberalized remittance scheme and how it is related to the amount you can invest in the US market each year. That we will see now. Okay. The LRS is a set of policies defined by the Reserve Bank of India that govern the remittance of money from India, friends. There is no limit, very concentrated. Okay, please concentrate here. There is no limit to the amount you can invest in the US markets, but there is a limit on the account that you can send abroad from India each year. Okay, according to the LRS guidelines, each individual is permitted to send a maximum of $250,000. That is 1,75 lakhs, 1.75 crores per year. We can send per individual. We can send 1.75 crores. Okay. So remittances under LRS are permitted for capital account transactions. That is for buying shares overseas. We are delighted to inform you that through Globalize, you can now open an international investment account to buy global stocks and ETFs and building your own global portfolio, friends. Right. So I want to ask you one question. Does in this group anyone know about fractional share investing? Please type your answers in the chat box, friends. Everyone. Do you know what is fractional share investing? What do you mean by fractional share investing? That I'll clearly tell you. Does anyone in this group, yes or no? Please type your answer. Even if it is yes or no, please type your answers in the chat box. Thank you, sir.
Bhargava says no. Nagendra Kumar, no. Kiran, yes. Venkat Rajshekar, no. Karthik, yes. So a mix of no and yes is coming. Venkateshwarlu, no. Suman, no. Srikant, no. Nikhil Trivedi, no. Sunny Balgala, yes. Karthik, buying part of stock. Yes.
Wonderful.
Yes, Karthik.
Wonderful.
Ravindra Kumar, not exactly. Subhash Dasari, no. Raghava, no. Riyan. Yes, recently I read article about fractional share investing by NSE. Okay. Dinkar Rao, no. Srinivas, no. So most of the answers are no. Okay.
Yes,
okay.
It's very simple, sir. Fractional share investing and how it is beneficial for you. Okay, this is one of the unique thing about the US stock market, friend. Okay, the investor can own fraction of stock. Okay, the Globalize platform allows you to own as low as 0.000001 shares of any stock. Okay, so the main benefit of this is that it enables you to think in terms of value of investment rather than number of shares. It will enables you to think in value of investment, not in number of shares. You can decide to invest a certain amount of money, and the number of units to be allocated to you gets calculated automatically and credited to your account. This is how it works, right? So now, for example, if I have to take an example, okay, if you want to buy $1,000 worth of Apple, and its share price is $490, you will get 2.040 stocks shares, right? This helps with more accurate asset allocation when building your portfolio, right? So fractional share investing also gives you the ability to invest in highly priced companies. Like, for example, if you see the Amazon, which is trading around $3,305, friends. One stock, if you convert that into rupees, each stock worth is 2,41,000 in Indian rupees. And if you see Alphabet, the Google's parent company, which is trading at $2,075, which is 1,51,000 rupees each stock, which otherwise would have been difficult for an average Indian investor. Okay, so we are delighted to inform you that through Globalize, you can now open an international investment account and have the flexibility to buy fractional stocks as you build your own global portfolio. So let me hand it over to Rajesh sir again. Will understand the offerings of the Globalize platform. Over to you, sir.
So here today we have something special for you, friends. We are introducing Globalize, the global wealth platform of Ventura Suceder in partnership with Globalize, India's first platform for global investing. So we are the authorized partner of Globalize. We can give this access to all our Ventura Suceder clients. The reason, as I told you, over the last 10 years, the US markets consistently outperformed all the companies like Google, Amazon, Facebook, and Netflix, growing at a tremendous pace. Already we know that we are using these companies every day, but are missing out investing in these companies. So we need to get benefit from their stock performance through this particular platform. And one more reason, as we have already seen, India accounts for less than 3% of global stock market valuation. And companies like Alphabet, Amazon, Netflix, Tesla, and other global leaders that are growing at a tremendous pace are not listed in India. So investors in US have benefited from this growth and generated superior returns with US markets outperforming Indian markets over the last 10 years. So to bridge that gap, we are coming out this with Globalize platform, where you can invest in international US 4,000 US stocks and also ETFs. ETFs are also available in this particular platform. And this is designed and built exclusively for customers in India. So let's look what are all the offerings of Globalize, friends. So it has access to international investing, to diversify your investment portfolio, buy international stocks and funds, and invest in companies you use and love, and get benefit from the growth of global companies. Invest and hold money in USD. Pay for overseas expenses like college or travel. Spend in any currency globally. Accumulate funds to invest in real estate and private companies. An end-to-end digital customer journey, world-class encryption and security processes. Each account is insured by SIPC, as we discussed, Securities Investor Protection Corporation, up to $500,000. And it has data-driven investment research. Invest in curated baskets of stocks and funds that help you navigate the overseas investment process. If you're not confident about the individual stocks, we have certain curated baskets called globes, wherein you can invest in a particular segment like artificial intelligence, other sectors like whatever available in that particular thing. So get global exposure and buy into themes and trends. And it's available to Indian residents. Globalize and its partners are regulated in India and the US and comply with SEC, FINRA, SEBI, and RBI regulations. It's already complied with all these particular regulatory bodies. So here I would like to share some data, some charts, friends. This is a chart which shows 5-year annualized returns comparing the US returns versus the India returns. This is the data till June 2021, 5-year data with US and India returns. If you look both over the last 5 years, you know, India pure portfolio has underperformed than US portfolio and a mix of India portfolio and US portfolio. If you can see the particular graph, a mix of India US portfolio helps to improve returns, reduces your risk, and gives a better Sharpe ratio. If you can see the right hand side of your screen, where US standard deviation is 14.5% and India 18.45%, but a mix of India and US has 14% standard deviation and with a better return of 17.66%, which is there at the left hand side of your screen. And similarly, if you see the Sharpe ratio, the Sharpe ratio is better with a combination of India and US than individual Indian stocks. So this is the data, the previous data. And if I have to translate this chart analysis into a specific number to understand in a real rupee terms, this would give the answer for that. So what is this chart shows, friends? It's that over the last 10 years, 10,000 rupees were invested in the Nifty. What would that give returns? Versus the same rupee if invested in S&P. What would that give the return? So separately it has given, and here you see as a combination of the US-India portfolio giving the superior returns. See, 10,000 invested in Nifty gave 31,000 and 10,000 invested in S&P gave 62,000. But a combination gave 46,000 with a CAGR of 16.58, which is better than Nifty. And the standard deviation is less. If you see, to generate a 12.24% CAGR in Nifty, the standard deviation was 17.37. But with a lesser standard deviation, lesser risk, we got a better return with a combination of Nifty and S&P. So this clearly shows the advantage of diversification, friends. And what are the advantages of the platforms? As I told you, 4,000 securities in US markets and other markets we can invest. Investment intelligence, model portfolios providing asset allocation and fund selection based on risk profiles. Integrated KYC and funds transfer. As soon as we open the account, even the KYC account gets opened, and it's an easy process which I'll show you. And international fund deployment. Use funds for international payments. Because in the overseas brokerage, like what we have in India, Demat is different and the bank account is different. It's not like that, friends. So it's called as a cash account and stock account. It will be in one and the same. So when we sell the stocks and when the account is amount gets into the bank account, we can use it in terms of dollars also. So that will be clearly having it, and maybe in question and answers also we can answer those things. So now some rules and regulations, probably in question and answer form, we can take this. So what all, so far we have talked about why international investing is important, how does it help from return perspective or diversification perspective. The question then is how all of this is possible. It's attractive, but there might be a lot of questions with the clients. Maybe let's take one by one. So one question might be, can investors from India invest in US? So this is the first question that might come into everybody's mind. So as we discussed earlier, the principal vehicle through which people in India can invest overseas is called the RBI LRS Liberalized Remittance Scheme that allows every individual in India to invest up to $250,000, up to 1.75 crore per annum overseas. This is per individual, friends. If there is a couple, it gets doubled. So it is per individual. And the second question, how does the investor open their account? So the account opening process is entirely digital. Simply sign up on the Globalize platform with the link which we give you. With few steps which I will show you, it will be taken care. Your brokerage account will automatically be created with our U.S SEC registered broker dealer partner for clearing and brokerage services. Once you fund your brokerage account, you can start investing through the Globalize platform and build your global wealth portfolio. So the next question, what are the documents required? So only two basic documents are required. One is PAN, the other is for the address proof, it's Aadhaar, bank statement, driving license, or utility bill. So only just two documents are required. Those two documents are enough. And as a globalized customer investing in the US, where do I pay my taxes? Where do I pay my taxes? This might be the fourth question. So because generally these questions should come in the question and answer session, but apart from this, post these basic questions, if you have any questions, we can deal it into the question and answer session, friends. So the answer for this is, if you are an Indian resident, you will pay taxes in India. However, some of your investment related income, such as dividend earnings, will have TDS applied. This TDS can also be claimed as a credit against an income when filing taxes in India. So because there is a double taxation avoidance agreement between US and India, you will not be taxed twice on the same income. One more question. How are my gains and earnings taxed? As you know, friends, in the Indian equities, post 12 months, it is long-term capital gain. Below 12 months, it is short-term capital gain. But in this case, that particular cap is 24 months. Below 24 months, it's considered as short-term capital gain. And above 24 months, it's termed as long-term capital gain. And what is the tax rate applied in India for my US investments? This can be the another question. So the tax rate applicable to you will be as usual as the rest of your income in India. Actual rate depends on your income level and nature of income. So interest income and dividend income are taxed at your normal rate of tax. Capital gain is applicable to any profits made on sale of investments. Actually, in US, if you sell a particular share and earn something, there is no tax on that gains in the US. But here, as Indian tax has this long-term capital gain, we are paying that. So if you are investing in US market and using those funds to your travel or children education, there the income tax will not be applicable. So these were the few questions. And now, what are the plans available in this Globalize? There are two plans, friends. One is base plan, the other is premium plan. I subscribed for base plan only because there is a zero charges for account opening. I have subscribed for this and started investing, wherein 0.025% per share per trade will be there. And I can access to 4,000 stocks. Fractional investing is possible. I get all the company information in that particular portal only, and there will be a real-time news beside each and every stock. And globes are also available to invest in any particular sector. And the premium plan has 4,999. As of now, we don't require this. We can start with a basic plan of 0 rupees per year. In chat box, Mr. Sudhir is asking something. FIIs are investing in our markets and making money. Is it wise to invest in outside market without having exposure in our markets? Sir, as I told you, there should be a 5 to 10% portfolio. I am not asking you to take out your entire money and put it here. A 5% to 10% to hedge our existing portfolio, because that diversification is important. There, as we have seen, a better returns with a lesser risk is possible with this particular diversification. And go global with the future. Go global with your portfolio. Now, one question, friends. What is the I'll have a poll here. A last poll. What is your world number one company in terms of latest market value? I gave here FAANG, FAANG, Facebook, Amazon, Apple, Netflix, Google. In this, because we know all these companies. So I'm asking you, which is the world number one company in terms of latest market value? I'll wait for a few more seconds.
So, lot of questions in the chat box. Mr. Vikas from Globalize is here. We'll take all these questions in the end of the session. So, in the Q&A session.
Has he joined, Charu?
Yes, he's there.
Okay. So, friends, I'm ending the poll and sharing the result with you. So you can see the result. 43% says Amazon, 25% says Apple, 23% says Google. Friends, it is Apple. Apple is the world's number one company in terms of market share. So, and I'm discussing about this FAANG repeatedly in this particular presentation. I'll show you why I'm discussing this about FAANG. So, invest in global gains and hottest themes through Globalize. And guided for global investing at your fingertips with all these companies. Now, what is the end-to-end digital customer journey with Globalize? First, you will be opening an online business, online Globalize account opening, which is just 5 to 6 steps. I will show you that. Post that digital KYC submission is being done. In 24 to 48 hours, your account gets approved. And as soon as the account gets approved, you have immediate account access where you can transfer your funds from Indian bank account into this Globalize account and start your digital investment process. And you can also have your reports, your complete reports monthly, yearly, and you can do an analysis with this particular Globalize account. And when you are selling it, again, the same sold amount is again deposited into this particular account, where you can use them as dollars in your child's education purpose or travel purpose, or you can take back in the form of rupee. It's a simple process, friends. Very easy process. How to sign up, I'll show you. The link which we will be sending you a link at the end of the webinar. If you click that link, this customer sign up form will open, friends. So you can just type in your email address, give your own password and click sign up. Then you will get an email verification asking an OTP which is sent to your email. So this email verification comes. As soon as you enter, see, this is the email verification code which is sent to your email from Globalize. As soon as you enter your email ID and password. The next comes the plan. Choose your plan, whether you want to go for a base plan or a premium plan. You can just select base plan from this. Initially, you try it, you see it, and then as per your convenience, you can upgrade to premium plan. But base plan is enough for us as of now. The next comes the plan details. As you have already selected the plan, it is asking the first name and last name. Just give the first name and last name. This is the details which I have given when I opened my wife's account. So I have taken the screenshot for your convenience to show you. Give the first name and last name. And when you click next, it will ask the basic information. What's your date of birth, gender, marital status, PAN number. And when it asks your phone number, it will once again ask you a verification code. Initially, your email ID is verified. Now the phone number is also verified. You will also get an OTP to your phone number. And when in future, whenever you open Globalize account, you will get an OTP to your email and mobile, which is completely safe. No other person can access it. So when a code is sent to your mobile, you will enter that code. After entering that code, the employment details is asked. Employment details, company name, industry, and politically exposed person, those questions, simple questions to answer. Finally, how often you plan to trade, investment experience, annual income, some basic details, friends. It will not take more than 4 to 5 minutes in doing this complete process. The final step is the uploading of PAN card and Aadhaar card. Just keep PAN and Aadhaar soft copy with you, and this entire process you can finish within 4 to 5 minutes. 4 to 5, even 4 to 5 minutes, it doesn't take minutes, less than 5 minutes. So after uploading this PAN and Aadhaar, it says that your registration is successful. You have opened the account, and for KYC it takes 24 to 48 hours. But within 24 hours, you will get the confirmation, and you will also get immediate emails whenever you open it and whenever you are registering it. These are the mails which I have taken a screenshot. So this is an easy process to start your journey with international investing. And start your journey of FAANG: Facebook, Apple, Amazon, Netflix, Google. So these are some amazing facts of FAANG, friends. Only these 5 companies I'm telling you about: Facebook, Apple, Amazon, Google, and Netflix. Facebook monthly active users across the globe is 2.79 billion people, which is 36% of the world population. Why we are discussing so much about these companies is because of these things. Apple is the largest company in the world with a market cap of more than USD 2 trillion, where iPhone contributes to 50% of the total revenue. And Amazon is developing a prime air delivery service, which will deliver packages through drone in less than 30 minutes. And friends, when Amazon starts this air delivery, we are the consumers. But are we the investors? We need to check that. And Netflix.com generated almost 1.5 billion global visits, which is 50% of global streaming traffic. Google was down for 5 minutes in 2013. In that time, the global internet usage was decreased by 40%. So this is what why Ventura is coming in introduction of this international investing in friends. And the poll results, if you can see, the first poll was: what is the Indian mutual fund industry? What is the concentration of global stocks in Indian mutual fund industry? 4.4%. Just for remembrance of you, I have taken this particular chart. World equity, US equity is 55.9%. Indian equity is 3%. That's the reason we are asking you to diversify with US equity. And S&P 500 FAANG stocks, which I told you: Facebook, Amazon, Apple, Netflix, Google. These are 19% of S&P 500, the US stock market. That's the reason we are talking about these FAANG stocks. And friends, a final slide in presenting this PPT. Ventura Suceder has used so many applications, so many tools, so many companies. We regularly use these 13 companies regularly. But today, in delivering this presentation to you, I used Facebook to send the invitation. I used Apple laptop and iPhone in sending you messages and preparing the PPT. I used Amazon books, wherein there's a lot of information which I gave to you, which I got through reading from books, and those books I've ordered through Amazon. Probably Netflix I didn't use in this particular delivery of the PPT. Google, I used Gmail in sending you email, and also Google Sheets, and Microsoft Excel, Word, PowerPoint also I used. Zoom, in fact, I didn't use it, but we are regularly getting in touch with Zoom calls. Today I've used Webinar Jam. And WhatsApp for inviting you, sending you reminders, all these things I used today. I used WhatsApp. And you might have some people have registered through your email, where I've sent mails through MailerLite. Calendly, we are regularly, you are regularly meeting us. You are scheduling the appointment through Calendly. Canva, wherein I used this for preparing the thumbnails, which to send this presentation. And this entire PPT is prepared with slidescore.com, and we are delivering this webinar through Webinar Jam. So these many tools we have used today. You can just imagine, friends, we are a small company using so many tools. And in your day-to-day life, just imagine what are the tech tools you are using, what are the companies you are using. And we all are subscribed. We pay them in terms of dollars only. All the payments are made in terms of dollars only. This is the power of international investing, friends. Slowly, the Indian consumers are increasing, usage is increasing more and more in these companies. And coming to our next generation, I can add some more into this, like Instagram. So next generation, they are using more than this. So now I'm ready for any questions and answers. Let me invite Mr. Vikas. Yeah, fine, sir. Fine, sir. So, friends, I welcome today's our guest, Mr. Vikas Nanda. If I can have everyone just quickly welcome him in the chat box. Please welcome Mr. Vikas Nanda in the chat box while I quickly introduce him to you all, friends. Please welcome him in the chat box. He is the chairman and co-founder of Globalize, India's first platform for global investing. He has over 30 years of rich experience in financial services. And his role at Globalize, Mr. Vikas provides strategic direction and leads the team towards achieving rapid growth. He's been previously part of Deutsche Bank, the managing director and global head of operations for clients onboarding and the executive vice president for IBM. He's an MBA from IIM Ahmedabad and BE in mechanical engineering from College of Engineering, Chennai. Mr. Vikas, we welcome you from Ventura Suceder. A few words about international investing and Globalize platform, sir.
Thank you so much for having me over. Hope you can hear me clearly.
Yeah, fine, sir. It's clear, sir.
Fantastic, fantastic. So, good evening to everybody. Thank you all for joining this session on a Sunday evening. As you've heard, Globalize as a platform is designed for people in India. It allows for cross-border investment. It allows for you to have an international investment account, which is fully regulated by the SEC in your own name. And it allows you then access to, as has been explained in the presentation, to all kinds of stocks, to ETFs, to globes, which are curated portfolios and specific themes. I think you've heard a lot in terms of why global investing is beneficial, both in terms of portfolio diversification, in terms of accumulation of funds overseas. So happy to answer questions. I'm sure there'll be questions in people's mind. I don't want to repeat all the excellent information which has already been shared. So maybe we can move to the Q&A. If there are any questions I could answer, I'll be happy to do that.
I'll read out the question, sir. Mr. Sudhir, Dr. Sudhir is asking, FIIs are investing in our markets and making money. Is it wise to invest in outside market without having exposure in our markets?
So the thing is that we all actually by default have exposure to the India market. Most of us are 100% concentrated in the market in India. I'll take an example that when COVID happened, there was a fall in the markets, market have risen. In a situation like that, the drawdown in the US market was less. And as you've seen over the last few years, the rise in returns or the increase in returns from the US markets has been quite compelling. So it's not an either or situation. It's a question of, do you stay concentrated in one market? And do you therefore miss out the growth which is available in the other markets? And what the US market does, and we've spoken about all these companies, the Amazons, the Googles of the world. One thing to remember is that they are growing not only because the US is growing. And I think as it was mentioned, global companies have a lot of their revenues coming internationally. So the question I would have is, of course, I can, let's say, invest in, let's say, a Flipkart whenever I can do that, which is only focused on the market in India. Or I can invest in an Amazon, which is going to benefit not only because India is growing, but it's also benefiting because America is growing, Europe is growing, China is growing. So it's not an either or situation. It's a question of should we and what is the best way for us to benefit from growth of international companies and international economies. And like we are thinking, how do we take benefit of international growth, the FIIs, what they invest in India is a small proportion of their portfolio because they're also trying to diversify. So I think diversification is a good thing, and our diversification gives us the opportunity to invest in a very mature market, to invest in a market which is many times bigger than the market in India, and to invest in a market which historically has given superior returns and has the potential to do that. Because one of the things to think about is that a lot of the fundamental research and problems which are facing us today, whether you think about clean energy, whether you think about artificial intelligence, whether you think about biotechnology, all of the R&D and research and the companies coming out with the answers to these problems are still coming from the developed markets. So if we have to, have a long-term approach to our growth of our portfolios, it is in our interest that we are able to invest in all of these companies which are growing and finding new solutions to the problems we face. And that opportunity exists in the developed markets. So, it's a long answer to a short question, but hopefully this is helpful.
Okay, sir. And one question is, can we invest in European stocks with Globalize?
Yes, so the interesting thing about the platform is it gives you access to the US markets. But in the US markets, you have stocks which are not only US stocks, you also have stocks which are listed, which are international stocks. So a lot of European companies, a lot of Japanese companies, including Indian companies, the emphasis of the world, all listed in the US markets. In addition, the US markets give another very interesting option that we can buy ETFs. And they are ETFs which are dedicated to Europe. They are dedicated to specific countries in Europe. You can buy specific ETF exposure to China, to Japan. You can buy specific exposure to commodities, which you can't do here. You can buy, if you are interested in precious metals. There is the variety of stocks, the variety of themes, the variety of ETFs available to you. The choice is unsurpassed.
Okay. So Mr. Naveen is asking, is Globes similar to small case available in India?
So as a concept, the idea that, where one is investing in a market and one wants to think about investing, let's say in a goal that you want to send your child for education, or you want to save for retirement, or you want to do long-term investment from a wealth generation perspective, or you want to invest in a particular theme, you want to invest in clean energy or biotechnology or next-gen technology, future innovation. What we're doing is we are doing the research, we're understanding which are the best stocks and ETFs in these sectors, and we are constructing these portfolios which allow you to do one-click investing. We regularly monitor these portfolios. We rebalance these portfolios for you. So all of the guidance and support needed to manage that investment is done by us.
And I've also explored the Globalize platform, sir. Wherever, if I am selecting a particular stock, the entire details of those stock is given. The information, news about the stock, performance about the stock, everything is given. It's very easy to understand. And one Surya Prakash is asking, is base plan allow us to invest for 1 year only at zero cost? Means he's asking whether it is for 1 year or continuously free for entire lifetime.
So the base plan is free for life in that sense. So there's no account opening charge and there is no annual charge. And once you choose the base plan today, then that plan is available to you, perpetually. It's not like the Dio model that is available for 1 year free. Next year you have to pay money for it.
And how is it different from E-Trade? Mr. Pavan Kandadada is asking, how is it different from a E-Trade?
So I think there are some fundamental differences. E-Trade also allows you to buy shares in the US market. It's a broking platform. what we have done is our platform does two other things. We understand people in India, and not just people in India, people generally are happy to get advice and guidance. So the Globalize platform is designed to work with partners such as Ventura, who can help you, who can handhold you, who can provide guidance to you. In addition, to help the investment process, we have constructed globes on the platform, which, depending upon your investment horizon in terms of your risk profile, you can choose specific portfolios. In addition, we do the research, and you have select funds on the platform as well. So we go above and beyond a simple broking platform to see how you can get the necessary help and guidance in terms of advisor support, in terms of product support, to help that investment process. It's also specifically designed taking into account our requirements. So you get, of course, the account opening process, as you've seen, is quite simple PAN and Aadhaar. It's quite seamless. The charges are very, very low relative to other platforms. Again, keeping our customer base in mind. And I think the other important thing is you get customer support based out of India. So you have the possibility to call and speak either with Ventura, speak with ourselves. So there are a number of features you will find as you use the platform, which makes it easy and convenient. One of the other important things is that when you are transferring funds via the LRS route, again, which banks can help you do online? What is the process to transfer funds? We have tie-ups with banks in India. As you log into the platform, you can see the specific process in terms of how to transfer money from ICICI or HDFC or Kotak. So all of this customization and special information you need sitting out of India, you get on the platform.
Okay, thank you. Thank you. And one question about the selling of shares. Mr. Vishwanath is asking, what is the typical timeline to get money transferred into account after selling share within US and to INR account?
So the interesting thing is that when you are trading in the US, if you sell your share today, markets are open, you will see cash in the account straight away. And if you want to buy another share against that, you can buy it today itself. If you want to withdraw money, the settlement cycle is 2 days. So if you sell your shares on Monday, on Wednesday, the money is withdrawable. You put in the withdrawal instructions, and then within 24 hours, the money is back into your account in India. So if there's any free cash in your account, you put in the instructions within 24 hours, because as soon as you put in the instructions, the payment gets triggered. And whatever time it takes in the banking system for the SWIFT message to come, for your bank to process the payment, to credit into your account, that's the time it takes. There's no holding period on our side.
And in our previous meetings, Mr. Nanda, you spoke about the international account wherein when somebody is selling the shares, through that account only you can use for travel and education expenses. Can you explain a bit on that?
Yeah, so one of the things, at the moment from the brokerage account, you can transfer money to your own account. And then, of course, we realize and understand that people will want to use that account to also make payments to third parties, likely to have a debit card. So that is a feature which is under preparation at the moment. And what I mean by preparation is it's under build at the moment. What that does is that it allows you to transfer money from your brokerage account to a bank account, which has a debit card, which then allows you either to spend the dollars on the debit card or use it to make third-party transfers. So that's how the entire system works there.
Okay. So, and Mr. Sai Sumant is asking, as we don't have global exposure, how to choose right global stocks? There is every possibility we may go wrong and it costs our money in dollars.
So that's a quite a important point. That how do you get the necessary guidance or advice to do that? Now, as far as stocks is concerned, we provide news and information about the stocks. We provide stock information. But when it comes to stocks, we find people tend to have their preferences, and sometimes depends, they want to buy stocks which they see their peers or friends buying. So we provide you the information for that. In addition, to be able to invest, we do a lot of research in terms of, for example, for broad market exposure, which are the right ETFs to invest in, and you have that information on the platform. Which are the right ETFs to invest in the technology sector, which are the right ETFs in, let's say, the consumer cyclical sector. So that's the other thing you have. For the first-time investor, what is also quite a convenient way to do the investment is to invest through Globes. So, for example, if you want to have, as a first-time investor in the US, a broad exposure to the US market, then, and you have, let's say, meaning for equity investment, you always want to have a longer-term horizon. One of the investments we would always suggest is the West Generator Globe, which has 70% exposure to the S&P and to the NASDAQ, and then has another 30% exposure to the mid-cap and small caps in the US. So it's a broad market exposure you get through a single-click investing, which gives you the introductory flavor on how to invest in the US markets. And then, one can build upon that as one does some further investing.
What about the currency exchange charges? Dr. Satyaprasad is asking.
So there are no charges that we take, either in terms of the money coming into the account or when we are, anyway, the money you send to us is you send in dollars. So the FX charges are the charges which your bank in India will take, and that is something you negotiate with your bank in India. We have on our side done some tie-ups. For example, if you use Axis Bank on a platform, you get some discounted charges. You use IndusInd Bank on a platform, normally they will charge 1,000 rupees for every transfer. You only have to pay 500 rupees. So from our side, we've done some tie-ups with banks in India to help reduce those charges. But whatever is the FX conversion rate, that rate is what your bank will charge in India. That is something you can negotiate with them. We do not take any charges on that.
And Mr. Ravi Linave says, will the proceeds to sale of US shares get accumulated in dollar account so that next time when I trade, then we eliminate the currency exchange cost?
Absolutely, and that is the big advantage of working with Globalize versus, for example, if you're working with a domestic fund of funds, because that you pay in rupees and you get money in rupees. Here, when you transfer the money in dollars, your money is permanently in dollars till you withdraw it back. When you sell the shares, the money comes back into your dollar cash account. You invest from the dollar cash account. So you can begin to accumulate dollars. You always keep dollars. Your buy and sell happens from dollars. So you actually have dollar cash with you overseas.
Once it's converted, it remains in dollars. There again, no charges.
Once it's converted, for the rest of your life, it's always in dollars, no charges, no conversion. It's in dollars, you invest in dollars. It's absolutely frictionless.
And I think people who have children who are going to abroad, maybe next 4 years, 5 years, probably I think this would be the right strategy to put it in dollars.
Absolutely, because you again eliminate the risk of FX fluctuation because you have expense in dollars and you are saving in dollars. So that's point number one. Point number two, you begin to accumulate money overseas in dollars step by step. So also, like we know, over the longer term, the rupee tends to depreciate. So as you save, let's say every year some amount of money, you can average out the depreciation and save some cost on that. And of course, then you are investing in a market which is relatively a large market. It gives you the possibility on all kinds of equities, but also if you're looking at any kind of fixed income instruments, so all of that is possible. So absolutely, as a strategy from a risk management, from a diversification, from a currency risk perspective, it would be the recommended strategy.
One question is related to the portfolio. How Globalize integrated into Ventura Suceder? Can I have single pane view of my entire portfolio? See, we have given a login option. We will provide a login option from Ventura's website. But the present portfolio platform which we are giving you for Indian stocks will be different from Globalize, because both are completely different. So, but we are providing a link through our website. Even for today, I will share the free account opening link with you. If you lose that link, still we have embedded it in our website. If you go to our website, you can see an option called Global Investment. You just click that. The same link today I am going to circulate with you, which you can open your account with free of charges. And Dr. Satyaprasad is asking, how do we transfer from dollar account to any other account to use it as dollar without converting back to INR? Probably you have answered this question, I think, sir.
Yes, I have. So, that facility we will provide, so that, it's a dollar to dollar, and then there's a domestic, if you're paying in dollars, there's a domestic ACH capability. So today, where clients, so that capability is now part of the US system, which you will get from us.
And Mr. Rian is asking, there is BSE INX and NSE INX. Does Globalize go through these exchanges? I think don't, or not.
No, we are directly connected. So when you open the account with us, you have an account which gives you direct access to the NYSE and the NASDAQ. When you put a trade, you are directly trading in the US market. You have the joy and the privilege of directly being in the US market. You don't have to go through any intermediate exchange.
And the major advantage is with fractional investing, because today here in India, if we want to buy a stock of an MRF, we need to shed huge amount of money. I cannot buy with 10,000 or 20,000 or 50,000. But I can buy Apple shares, which is $148. I can even invest 10,000 in Apple share. I can even invest 10,000 in Amazon. So the advantage of fractional investing is there with Globalize. How keep updated about us markets? Any app? Mr. Sandeep is asking. Mr. Sandeep, as per my experience, I opened Globalize account a month back. Regularly, I am getting emails of all the international stocks. Globalize is present in Facebook, Instagram, everywhere. So we are getting information through these social media, as well as when I log into the Globalize portal and when I search for any stock. The details of the complete stock, the stock performance of 1 year, 5 year, and I can put the date, as well as the news pertaining to that stock. So all these are available in Globalize platform. So once you open the account, you can access it and you can explore it. Definitely, you will be getting more information about the international stocks.
In addition, what we're also doing is once you sign up to the platform, you get a weekly newsletter. And that newsletter gives you a weekly update in terms of what is happening in the US from economic development perspective, what is the main news. It'll give you an update on a significant company happening, and it will also give you some further information on specific ETFs. So we have a weekly newsletter to help inform you in terms of economic development and some stock specific developments. We also publish a blog every week where we cover different themes and sectors. So, once you get the link and you're on the website, you will also see the blog section. I will encourage you to read those blogs. They are very informative. They are written in a very simple language, very easy to understand, but will help you understand specific sectors and specific developments in the market if you're interested to learn more and build more understanding.
And Kusuma is asking, can we convert the dollar into rupee when we want? That is, can we take the benefit of currency depreciation?
Absolutely, at the click of a button. You can convert it back into rupees whenever you want. However, I would suggest you normally would want to do that only when you decide to bring the money back to India. Because otherwise, if you bring the money back and you send that back and you bring that back, then there is the transactional cost in between. So that's not something you would want to do. But if you want to take the benefit of dollar appreciation and bring the money back from a longer term perspective, you can do that at the click of a button.
And one question regarding taxation. Bhargava is asking how we pay taxes on profits. Also, how much will be brokerage charges to buy and sell?
So brokerage charges are quite simple. It's 2.5 cents per share. So you buy Apple stock for $150, you just pay 2.5 cents. So it's quite nominal, the brokerage charges. As far as the taxes are concerned, the taxes you have to pay in India, like you normally would pay your taxes in India as part of your income tax returns. And like was explained, there's short-term and long-term capital gains as per the calculations in India. Short-term being anything less than 2 years, long-term being anything less more than 2 years. And you also get the benefit of indexation. And the way you pay tax is the normal way you pay tax in India. So there's no special requirement for that.
Mr. Ravi Nino is asking, currently we get capital gain loss statement from the portal, which is used for filing the IT return in India. Will the dollar capital gain loss statement will be acceptable to Government of India?
So what you do is, so there are two things here. So one, every month you get a broker statement. This is a regulated brokerage statement from a regulated broker in the US. Absolutely, that is the information which is there and available for all of your tax filings. At the end of the tax year, we also give you a capital gains statement, which actually shows you for your transactions in the previous year, what were the capital gains to ease the computation process. So you have that information from us as well.
And that question I didn't understand. Prasanna Pendyala is asking. I missed some conversation. So my question is, this trading is buying and selling stocks or just invest like MF and taxes? I didn't understand the question.
So you have both the options. If I see, the interesting thing is when you open the account with Globalize, you have the option of buying stocks directly. So you can buy the Apple and Facebook. You also have the option of buying funds, which is the ETFs and then the managed portfolios. So it's not an either or, because in India, some platforms only allow you to buy mutual funds. Some platforms only allow you to buy equities. The Globalize platform gives you both in a single platform. Hopefully that answers the question.
Yeah, might be. Stocks are just invest like MF and tax. Almost all the questions we have covered, sir. And patiently you have answered all the questions. Any other questions, please type it in the chat box. And in future also we can have regular meetings exclusively for global investing if you require it and if it is needed. Do you follow India financial year or US financial year for reporting capital gain or loss statement? Gain or loss statement. Mr. Kiran is asking.
For, we know that people in India need to file the tax statement as per the April to March financial year. So we will provide you the information from an April to March financial year perspective. Again, somebody asked us earlier, what is the difference between us and some, platform like E-Trade or something. We are focused on India. We therefore customize, all of this reporting information for India as well.
Okay. So we have answered all the questions, sir. And thank you very much for coming and clearing all our doubts, sir.
Thank you so much. Thank you for having me. Thank you so much.
And we'll get in touch with you. And if it is required, I'll request you for Ventura Suceder clients in future. If any meeting like this is required, I request you to come and clear the doubts, sir.
Sure. My pleasure. Thank you so much for inviting me.
Thank you. Thank you very much for taking your time on this Sunday and coming here, sir. Thank you. And thank you, friends. Thank you, Ventura Suceder clients, for accepting our invitation and joining on this Sunday. Hope we have cleared all your doubts. And here I am sharing you this particular link where you can just click this. If you click this, and another window opens where the free account opening link is being given. In that, as I told you, as I shown you in the presentation, just start giving your email ID and create a password. Immediately you will get a verification code to your email, and the step-by-step process you will easily understand with this link. And now post this webinar, after I close this webinar, if you miss that link, not at all a problem. You just open www.venturasuceder.com. In that, I have given a link called Global Investment. You just click that link and you can start. And anytime you face any problem, we are there. You can call me, you can call Chari, you can call Yogi, anybody you can call, so that we will guide you and we can start investing this. Do you see this link? Okay, sorry, I didn't click that link. Now you can see. You can just click that link so that you can download. You can another window will open with that particular link. Is it visible, friends? Is it visible? The free account opening link, is it visible? Otherwise, you can just go into the website. Yeah, okay. So you can just click it and open it. Otherwise, you can go to website. And friends, thank you very much for attending on this Sunday. And again, after 1 month or 1.5 months, we will be again coming with a different webinar, a different topic. So every alternate month, we are coming out with these webinars to create some value addition to you. In future also, we will be coming. Please encourage us in doing such activities by your participation. If you are more, because today this webinar has a lot of participation. More people have registered and also joined. So please cooperate with us, please support us, please motivate us in doing such activities wherein we are in continuous touch and we both are upgraded on this financial front. And friends, for any PFP reviews, our website has the online appointment scheduler in the contact us page, or we will also sending you the online appointment schedulers. Please schedule the appointment as per your convenience. We can connect over Zoom and review your PFP document. And thank you all, friends. Thank you all once again for your continuous support and trust on Ventura Suceder. Thank you, friends. Thank you very much.